What's going on, traders? I hope everybody had a great day in the markets. It is Wednesday, June 21st. Before we get into it, I wanted to mention that this video is for educational and entertainment purposes only, and how much I appreciate the viewers coming in and watching these videos. I hope that it is providing some value to your trading as we navigate these markets together. That being said, let's get into it. All right, so we are looking at the daily chart here on the the Spider S&P 500 ETF. Markets were down again today, about $2.25. We were in the negative 0.51%. Final print coming right at the daily 9 EMA at 434.94. And it certainly will be interesting to see if the bulls can hold this first key short-term moving average. If we start seeing some closes below, I'll definitely have my eyes on that 20-day period moving average down at 429.40. But there are still a lot of areas that the bears need to get through to really see more selling come into the issue. We've had 3 red days now in the market, and sometimes, not always, but after 3 days of selling, we can see a potential green day come in the markets. Now, that might be a similar bar to this one here, this candle, where it is a green bar, and really we are just setting up on a bear flag on the daily. That is one potentiality. But, what we try to do, of course, as traders is know our pivots, right? Know our key levels that, if the market is over our bullish pivot, then we're going to be looking more at longs, and if it's under our bearish pivot, we're going to be looking at shorts, and that way we are prepared before the markets open and have a framework to work with to kind of set our bias overall. And certainly, yes, we have created a downtrend now in the markets, and here's our high, right? Lower high, another lower high, and um, and so we just need to be aware of that. Eventually, at some point, even today, the dip buys did work at a certain point, and there is going to be a time where we're just going to have that trend day down, right? I don't know when it's going to be. Most of the trend days we have been seeing have been to the long side, but we will have that trend day down where we buying the dip and the dip keeps dipping, right? So, we just need to be aware of that and not get too stuck in the framework of that, oh, this is support, we're buying. This is the next support, we're buying, only to get stopped out again and again and again. So, just having those key areas that we are watching and planning for to help frame our bias is very, very helpful. So, as I've said many times on Twitter, a prepared trader is a profitable one, right? So, slightly bigger picture, I have to say, chart is looking a bit bearish. Now, we're going to have to see whether or not we actually hold this daily 9 or if they break through. But, as I was mentioning, we are in a downtrend now, right? So, that is something to consider. Can the bulls defend and start getting us back up over some of these key bigger areas? Sure, the dip buy did work today, as I was mentioning, but eventually they won't. And like I've said before, it doesn't mean I think we're going to crash. The bears have a lot of work still to do before we really start to see some selling come into the markets. But that being said, it doesn't mean that there won't be small short opportunities as we cool off and retrace a little bit. And so, we don't want to be blind to those trades if they are presented for us, right? So, in a slightly bigger picture, sure, we have broken the first key bullish pivot, but there are many levels, as I was mentioning, that bears need to get through to really see that selling. But like I said, if we do start seeing that close under the 9 here, bigger picture, I'll be watching that 20-day moving average here around 429.40. This might pick up a little bit tomorrow, so we'll see where it is. But certainly an area I'll be watching. So we've looked here at the daily chart. We did come right into that top of the volume profile, and that's really when we start seeing that selling come in. So now I'm going to go over to our next macro trends and see. So this here, this pivot is the first area, and actually let me zoom in a little bit here in a second, but you can see when we did pop up, we came right into it, back tested, and then we sold back down. I think this was after the gap down day. Yeah, when we had we had gapped down, we tried to, the dip was bought off of this trend. We came back, retested, and came back down. And so let's zoom in a little bit here. And this is really the trends are a bit cleaner on futures of where we are trapped. Okay, so the first key area that we're watching when I was talking about, the bull pivots, the first bull pivot being broken, there's really two of them, right? The first major one that we are watching is the highs here from Wednesday, and that triggered the big breakout on Thursday. This area around the 438, 30, 40 area, 25 zone. I'm not huge on support and resistance personally, so we could even make a bit of a demand area, and I'm not going to keep it on the chart, but I'll just duplicate it kind of so you guys can visually see the zone overall. But it would be, something like this, right? Because these are the highs here. We got a little bit of a fake break and then a sell here. But this is really the area that triggered the breakout. So I'll be watching this zone here. Like today, like I said, there was a nice, bull move to be had later in the day as we recaptured this trend line and had a nice push. But as I was mentioning, it's still, the high, lower high, lower high, lower high, right? So you can create that downtrend channel. So, in the short term here, before we can really get bullish and before that this downtrend is broken, gonna be watching this pivot zone in the 438, 35, 50 area. If we start getting over this, okay, then it's more likely that we're actually going to see a better move to the upside. Even though bigger picture, of course, we are still bullish overall. Just short term, a bit bearish here. So keep an eye on that level. I certainly will be, but I'm taking off, the zone here. But either way, just as that illustration. So, but other than that, after we get over there, it's these lows from, what is this, Thursday or Friday? These it happened overnight, but these lows are the next area that bigger picture, the bulls are going to need to recapture for a move back to these highs. And let's just mark that off really quickly so we can just have a visualization of it. And that level would be around pretty much, well, 439.95. I'm going to call it the big 440, right? So we're going to need to first get over the 438.50 zone, and then the 440. Those are going to be the key areas that the bulls are going to need to recapture. So, technically, yeah, short term, I am a bit looking for a little bit more of that retracement, bearish in the short term, but we're really stuck in a channel here between these two key pivots. And you can see, even here in after hours, or maybe this is right at the end of the day, we had come in and retested right here, and then it had been bought up, right? So this area here where we kind of double bottomed before CPI, I think this was either CPI and this one was FOMC. I don't remember which. No, this was CPI last week. I forget what caused this, if this was FOMC. But either way, um, this double bottom area is that key area we want to be watching as well to see if the bulls can defend it, breaking under this 434 area with some confirmation, and then we can look to possibly see more selling back down, a bit lower in the markets. And that next key area for the bulls is going to be around that 430, 429 area, 429.50. I'll be watching that down here, which pretty much lines up nicely with the volume profile value area lows right here down in that 430 area as well. So we'll see what it looks like if we do get down here. But immediately in the short term, bears are going to have to get under this area to start to really see the selling come in. And first area, besides this bigger key zone here that we'll be watching, that I would be potentially interested in taking some longs at, is going to be right these highs from pre-market, and this is last Friday. So I'm going to be watching this area as well, and that's around the 431, 50, 60 zone. I'll be keeping an eye on that. I don't know if I'd necessarily directly be buying into it, but if we break below, bulls show their strength and gets bought up, recaptures, then I might be interested in it. But I certainly will be watching that as well. So this area, again, it's the kind of the same thing. I don't know if I'd directly be buying it. It has been tested now a few times. The more it gets tested, it chips away there, and we have more chance of it actually breaking. But if we did break under that 434, and same situation, if it's bought back up and buyers are there and it recaptures, then that might interest me for a long trade. But let's see, tomorrow if the bulls can recapture the 436 area, which is the hourly volume point of control here. I think that would put us in a nice framework for a possible move back up to retest this key zone that we were talking about before in the 438 area. But let's see, that would be interesting. And I think if we did come up and print up here, that would give us that that green day, as well as that kind of that smaller candle overall, setting up that potential bear flag on the daily chart that we were looking at earlier, right? So let's see how that plays out. But let's look into our day trading fibs here. And, you can see how we broke this key. The key 23.6 has been breached. And now we have lost the 38.2. And that's pretty much where we came in today. That was the high where we just could not get over. And then we saw the selling come back at the end of the day into the markets. So we could also just be pinned, right? Just here and trade in between the 50 and the 30, the 38. So that's also another possibility. But we just want to be aware, and really, we can set this area as our new intraday range. We were talking about now looking at, as we've seen 2 days here now in the markets, waiting for that range really to be established. And let's go into, I think it was on this one. Right. So this was the range that was kind of established yesterday that we were watching, and it pretty much is holding. We had a couple of fake outs today, and we were talking about, these consolidation, and even though we are technically downtrending, the range has been pretty tight overall, but seeing a lot of the fake outs, right? Fake out to the upside, fake out to the downside, fake out to the downside, now being bought back up into the range. So just be aware of that. Those that more complex and tricky price action that usually is presented during these phases in the market. So I think I feel pretty comfortable. I could bring the range down here to include these wicks, but for right now, I feel pretty comfortable in having this be the range that has been established. Right now, here in after hours, we're trying to bid it back up into the lower part of the range, but I've been over this before. When we do have these ranges, kind of marking off that pivot zone, the 50% zone within the range, and then using that, if we stay in the range, and then using that as our bull and bear pivot if we are just trading the range, right? So here, technically you would be still maybe looking at, longs at the bottom of the range, because the risk to reward is nice. But if we are above this area, then we have a more confirmation that we would be likely, or more likely, to test the upper part of the range. If we're below, right, what happened here today, we came right into the 50%, and then we were already trading under, so we're using that as our marker that it's coming back up, and it gets shorted back down. Same thing if it was flipped, right? If we were bullish. And actually I can do it like this to actually do it. Oh, did it totally flip it? Oh, I thought it would keep it. I draw it. I guess it counts it as another chart, so it didn't work. Okay, sorry. But for illustration, if we were over the 50% line of the range, and we were over it, selling down into it, and then you take the long, and it comes back into to retest the top of the range, right? So that's how I like to look at it. We've been over that before, but here is a quick, that's a quick little trick that I like to use for anyone who is just tuning in for the first time. So yeah, I'm going to be watching this 437. I think that would really recapturing that would be, the sign that we could potentially see the moves back up into the top part of the range here. And certainly if we break over, come back and retest, and it pretty much gets us, that would, lead me to look for that 440 area again to be tested. And if we can get over that, then we can start looking for those higher prices. Probably next target for me would be around that 441, excuse me, 30 area, 25, and then look to see if we couldn't get closer to 442 and see if we can't fill these breakdown candles here. But if we do get out of the range to the downside, right, I'll be probably looking to see if price is going to come back into that 433.60, 50 area, retest these double bottom, risky, long entry, as I was saying before. It has more chances of getting broken more times that it's tested. But if you are short, that might be a nice target for you to exit some of your position because, of course, you don't know whether or not it will be supported or not. So I'm just going to mark off some of those levels here so we can just have them on the chart. And if we keep selling, if we break under that 433, 60, 50 area, next level to the downside, be watching probably around the 432, 50 zone here, but ultimately going to be looking at the top area here. This is from 2 Fridays ago, and these pre-market highs as well. So I'll be looking down here in this zone for a secondary kind of bear target if we do start to see the selling come into the issue. And let's mark off those bull zones, right? So first we've got 440. Okay, 440.06, close enough. 441.35, we'll call it. And then 442.15, about that zone there. Since the bulls got 3 levels to the upside, we've got 1, 2, 3. My other target here would be, really this area is the major zone because this caused the initial rally down by the 429 area. But I think in the shorter term, we'll probably be looking real close to that 430. We were talking about that level before, and it lines up pretty nicely here with that value area low as well. So that definitely could be an area after we sell. If we have one of those trend days, we're selling, we're selling, we're selling, and then we come into this area right around power hour 3:30. Okay, well then that might be a time that I would consider trying to take a long down here, especially if we broke under and then recaptured to trigger long. For sure, that would be something I'll be watching. Of course, the direct buy is a little bit more risky, but the risk to reward overall isn't that bad. If you've got 430, 31, you're risking 30 cents, confirmation under 430. If it breaks under 430 and, comes down to, 475 or something like that, you probably ditch that trade idea. But yeah, so that's pretty much what I'll be watching. I hope it helps, and I really wanted to, thank you again for tuning in. If you've made it this far, if this video is being helpful to you, a subscribe would be, mean a lot to me, and it really gives me an indication whether I am providing content that is helpful for you, and a beautiful like as well really helps the video get pushed out to more people with the algorithm. So I wish you the best in your trading tomorrow. Let's be smart, be safe, no bias, follow our plan, follow our rules, and take care.